Hey guys, welcome to another video by Fully Informed Trade, or FI Trade for short. My name is Alex, and I'm going to go ahead and review the markets, primarily the stock, the bond, the commodities, and the Forex markets. Without further ado, let's go ahead and get into the details. I'm going to be talking a little fast because we have a lot of information to go ahead and go over. First of all, dollar index went ahead and rallied from around 9 a.m. onwards. Let's zoom out a little further on the 3-month chart and go ahead and review what's going on. I felt that the markets would find some support at around $79 and continue a little higher for the short term. We got resistance at around $80, which is the 20-day moving average. $80.50 is the next resistance level, and after that is the $81 level. So we're going to watch those levels very closely in the upcoming weeks and make sure that we the dollar is able to break these levels so that we can anticipate a sell-off in various commodities or a continued correction in certain commodities. Let's go ahead and look at the slow stochastic. You see a divergence in the %K, which crosses right over the %D. And you got to watch these oscillators very close because they are a good leading indicator of when markets are going to continue or when markets are going to reverse. Let's go ahead and look at the Dow Jones Industrial Average and cite some quick market statistics. Dow Jones Industrial Average went ahead and closed slightly positive on the day's session. It went up by 0.18%. S&P 500 was negative 0.13%. NASDAQ Composite was negative 0.38%. New York Stock Exchange Composite was negative 0.27%. Russell 2000 was negative 1.59%. S&P 400 mid-cap was negative 1.10%. S&P 600 small-cap was negative 1.82%. Small companies performed the worst amongst all stocks, and amongst the small companies, technology companies did even worse. Alright, overall, my viewpoint is this. Stocks were relatively negative on today's session. Overnight, Europe and Asia were slightly positive or relatively positive by around 100 points or so. Main reason being was US's great or positive start of the year, but right now, stocks seem to be stalling a little bit. They might pull back before earnings season, or they might pull back after earnings season is over. That's up in the air. Right now, I don't feel that comfortable buying into stocks, but I overall have a neutral to somewhat of a bullish bias, but that will change after earnings has already gone through, especially the major companies in the first 2 weeks of earnings season. That being said, let's go ahead and review the gold market. Gold market had its correction, and that being said, the gold spot went ahead and closed negative. I believe it went down by around 3% or so. Silver was down by around 5%. So overall, silver and gold didn't do that great. They weren't that hot. I saw a head and shoulder pattern on the gold market, and because of that, I didn't really like it. The gold market did pull back, and it finished off its head and shoulder pattern for the most part, but right now it seems to be finding somewhat support and pushing itself a little bit back. It's eating its tail just a little bit. Overall, though, we're still below the major multi-year trend line, and I believe that multi-year trend line will still hold, and I don't find that it's going to be a very good support. That being said, I think that the gold market is walking on very thin ice, and just staying above this trend line for this long is that in and of itself is a quite it was very unlikely to begin with, and just because it is, I don't feel that it's that great of an idea. We could push higher in the gold market, but that will be later on in 2011, somewhere in the middle of the year or towards the end of the year. But right now, I don't feel that gold is a very good investment at all. Let's go ahead and review the silver market. Silver market, same story. We're looking at the multi-year trend line. If you want to get an idea of what it is, I'm going to go ahead and take these off. But pretty much, the silver market is pushing beyond a trend line. It really shouldn't. It tried to make new highs, and it has. The only issue is that it's below the same trend line again. So, overall, not too positive on the trend line, not too positive on the silver market. I feel that the silver market could go below this and stay below this for a little bit longer. That being said, let's go ahead and review the volatility index. Volatility index was relatively positive at first, but then it started. But then it had somewhat of a minor pullback. Main reason behind it is because the Dow Jones Composite closing or closing somewhat positive at around 12 p.m. onwards. 12:30 p.m. onwards is when it started to have this reversal because of that volatility index owners decided to sell their stocks. That being said, volatility index only goes up when the markets go down. When the markets go up, volatility index tends to pull back. Bond market seems to be coasting a bit. It seems somewhat like a relief rally, coast rally, but pretty much it looks something similar to what we've seen previously in the bond market, something like that. And because of that, I don't find this market very attractive. It could just continue to go downwards and continue its downwards longer-term trend. As you can go ahead and see on the slow stochastic, you see the %K crossing below the %D, and that's pretty much a negative indication of trend. Pretty much, it could be foretelling of short-term or a longer-term reversal and a continuation of the long-term downtrend in the bond market, just because investors are finding stocks to be much more attractive. And coming earnings season, over the next couple of weeks, you're going to find stocks rallying just a little bit higher, and people are going to basically take their money out of bonds and put it towards stocks. That's why I don't find bonds that attractive. I felt that this was a relief rally that people should sell into just to reduce the losses or lick their wounds. Let's go ahead and review the crude oil market. And around 9 a.m., give or take 8 a.m. onwards is when the market pulled back. And that's pretty much when the dollar index went ahead and rallied. If you're going to, let's take a little closer look. 8 a.m. onwards is when, 8:30 a.m. onwards is when the dollar index continued going a little, or had its reversal, reversed, and it went a little bit higher. And then it continued its upwards trend throughout the day. Right now the dollar index gapped up a little bit and is continuing a little higher again. So overall, what would crude oil do in response? It will pull back, and that's what happened in the futures pits. That's pretty predictable about commodities. Gold pulled back a little sooner. That's because of fear in Asia and Europe. However, silver and crude oil responded immediately to the dollar pullback, or more like dollar rally, and then the gold, and then the silver and crude oil market did the opposite and started pulling back. So that's what I meant by a symphony play. Stocks should continue higher, dollar rallies, commodities should fall, specifically silver, gold, and crude oil. I thought gold was going to fall first just because of the fact it had a head and shoulder pattern and that it was going to fall off its own weight. Silver and crude oil most likely because of the dollar. And there's also the same issue with silver and gold having the multi-year trend line issue. Overall, that's what I want to talk about for today's trading session. Stocks, or just have an overall review of stocks. Stocks, I shouldn't see any of you guys buying stocks after earnings season is over. Once companies are done reporting earnings, that's not the time to start buying stocks. That should be a time to start selling stocks, or before the company even reports earnings, that's when you should be selling stocks. That being said, we're only a couple weeks away from earnings season for the first couple of Dow Composite stocks. So before companies start reporting their earnings, you should start selling your shares, because the markets are just any minute now. I feel that the markets are going to start pulling back. If we go ahead and look at a long-term chart like the 1-year chart, we could go ahead and look at the slow stochastic, and it's making its quick way right above the %D, and that's just because people are going to continue buying into this earnings season. But once earnings season is over, lights are out, people are going to start selling. So as far as commodities are concerned, I don't feel that there's any stimulant to this commodity market aside from the dollar index going down. But I don't see the dollar index going down. Because of that, I feel that commodities will pull back or continue their longer-term correction. Stocks will continue upwards because they have an economic stimulant, primarily earnings season. People, there's going to be some hype baked in. People are going to continue bidding up the value of stocks up until companies to report earnings. I feel that earnings won't exactly surprise investors that much. And because of that, I feel that investors will most likely start selling it after earnings are announced. Because of that, that's all I want to say. Dollar up, commodities will continue down, stocks should continue their trend upwards up until earnings are released. That's all. And if you guys want to use the same trading software that I use, please be sure to check out the link above or below this video. Thank you all for all of you watching on Facebook or YouTube, and please be sure to stay plugged in to continue watching these videos and learning more about how markets all work and correlate amongst each other. Take care, folks. I'll see you guys next time.